here on time. Not everybody, but enough for a quorum. The records show we do have a quorum, and thanks to those who do arrive on time. We hear all this discussion about daylight savings time, but Senate time is way worse to me.
I was getting you a present, Mr. Chairman.
All right. Are you ready? Because Senator Harbin's not here, so we're going to let you have the floor, Senator Al. And Chairman Watson, I'm going to let you do a brief introduction of your bill, if you don't mind, and then I'm going to hear from the subcommittee chairman about their actions, okay?
Uh-oh.
Go ahead.
Go ahead? Okay.
He was late, so you get first dibs.
Okay. This will be very quick. Thank you, everyone, for allowing me to present this bill. I apologize to the people who have heard this before from the subcommittee, but this bill basically seeks to clarify.
Excuse me, can y'all hear her? I'm not hearing it coming through here. Try again.
I didn't have the microphone
That's better.
on me.
Thank you.
Sorry. OCGA code related to insurance coverage of emergency care. And what we're trying to do is add on language that if a patient seeks emergency medical care for reasons that meet the, quote, prudent layperson standard, that this care should be covered regardless of that patient's final diagnosis. Now, just to give some context, we are passing out some packets that are going around. I just want to walk you through the contents of these packets. This will save some time because you can look over it at your leisure. The first piece in that packet with the pink tab is the final report of a Georgia House Study Committee that was tasked with studying this exact issue in 2018. The second piece of the packet are two pieces from the purple and the yellow, are two pieces of written testimony from advocates representing both patient advocacy groups and the American College of Emergency Physicians. These two individuals testified at the subcommittee meeting, and their written testimony is included. The third piece, under the green tab, are two lay press articles on this exact issue, which has gotten some attention over the past 2 years. One is from the AJC, and one is from a national news outlet called Vox. And the final tab, under the blue, is a copy of the federal lawsuit being brought against Blue Cross Blue Shield for this very issue. So just to give some framing of this issue, in 2018, the Georgia House of Representatives created a study committee to look into this phenomenon of retroactive denials of claims received for emergency room care. This study committee was formed in response to a policy that Blue Cross Blue Shield implemented in 2017. So essentially, policyholders, patients, are being forced to self-evaluate before making a trip to the emergency room and to make an assessment on their own as to whether or not their medical condition is, quote, truly an emergency or not. And if after, subsequent to the emergency room visit, the insurance company determines that their symptoms didn't justify a visit to the ER, then their claims would be denied. So just to frame this in real-world terms so we can know exactly what we're talking about, I'm going to give you a couple of examples of patients whose claims were denied, both from the House Committee's final report and from the federal lawsuit in which Anthem Blue Cross is named. All patient information has been anonymized, of course. We have patients who are presenting to the emergency room after severe motor vehicle accidents with excruciating neck pain requiring radiographic imaging and workup. We have patients who have known histories of cardiac disease who were recently hospitalized for heart disease, presenting with chest pain and shortness of breath. We have patients presenting with fractured bones, one after an incident of domestic abuse requiring police intervention. And patients presenting in sickle cell crisis so severe that doctors in the ER actually ultimately admitted this patient to the hospital for further care. All of these are examples of claims that were denied because the insurance company determined after the fact that emergency services were, quote, not necessary. This is in their words. So before we dive into the specifics, I want to talk a little bit about the prudent layperson standard, which is the legal precedent on which this legislation is based. What the prudent layperson standard is it requires insurers to cover services where, and I quote, where a rational person without professional or specialized knowledge in medicine would believe that their condition would be one of many emergency medical conditions, for example, heart attack, stroke, severe injury, threatening bodily function, and the like. Now, what the skill set of an emergency physician is, literally, is to identify and evaluate possible dangerous symptoms, work them up, treat them as they're found, and provide reassurance if, in fact, they turn out to be non-life-threatening, which hopefully they are. Oftentimes, when patients present to the emergency room, even medical staff cannot determine immediately between a life-threatening emergency or another condition. And that's why, in fact, patients go to the emergency room to allow medical professionals to make that workup and determination. And that's where patients are instructed to go. They're doing exactly what they should be doing. Now, just to be clear, to argue the other side, no one is proposing that patients should go to the ER for frivolous reasons. Seasonal allergies, not a good reason to go to the ER. A hangnail, not a good reason. However, in the House's study report, what they've noted is this, is that many cases that they identified did in fact meet this prudent layperson standard for coverage. And these were patients that were indeed directed to go to the ER by their own physicians, but their claims were still denied. So this bill that I'm presenting to you today essentially seeks to close a loophole in the current insurance code. So just in closing, I just want to frame, these are the two harms incurred when this happens, when insurance companies deny coverage. The first harm, obviously, is that patients are unfairly burdened with the debilitating cost of their emergency care. And the second harm is that patients hearing about this phenomenon, either maybe they're watching this live stream now, maybe they're reading it in the lay press articles that I've included in your packet, they hesitate from seeking needed urgent or emergent care because they worry about possibly being the next patient on this list and having to shoulder these costs. So in the words of the House Committee report that you can flip to at the end, quote, if illnesses and injuries are left undiscovered due to the fear of using health insurance, then it would appear that the policyholders do not have insurance coverage at all and have been paying their premiums for nothing. So just in closing, this is a bill that seeks to close this loophole, adding that care incurred for symptoms meeting the prudent layperson standard should be covered regardless of final diagnosis. And with that, I will yield to...
Thank you, Senator.
Uh-huh.
Chairman Watson, can you let us know what the subcommittee weighed in on this?
Subcommittee heard this last week. Our subcommittee is Senator Sims. Senator Robertson was not able to be there, so we had ex officio Senator Kirkpatrick. So we heard from Senator Al and multiple witnesses thereof, and it was unanimous for consideration for this. We passed it up unanimously for consideration here at the big committee. I'll be happy to answer questions, and I have some comments.
Does anybody have any questions for Chairman Watson? All right. Does anybody have any questions for the author of the bill? Let's see. Number 3, Senator Robertson.
Senator, first of all, great presentation. Even I understood what you were talking about. Now, what is the process that who and how?
Senator Robertson, I'm going to interrupt you. For some reason, your mic won't come on.
This happened last week, too.
No, I cleared it last time. There we go. All right.
We good?
Just have to clear them every now
There
and
you
then.
go.
All right. Go ahead.
Thank you, Mr.
I
Chairman.
didn't turn you off on purpose, although I'm tempted some days.
We'll let the courts decide that. Who and how is it determined by the insurance company whether something is not necessary after the fact?
That is a great question, and that is a question I've been trying to answer since I've been diving into this issue, since even before I got here. I spoke with representatives from the Medical Association of Georgia who are indeed involved in this federal lawsuit against Blue Cross for this very issue. And I think that the issue is, and that they've pointed to again and again, this is a chronic issue, is that the reasoning behind insurance denials tends to be very opaque and is deliberately non-transparent. They consider their algorithm for how they define or justify an insurance denial proprietary, so it's been very difficult to get that type of information. So the answer is they're not telling us. However, one good thing to note is that there are certain conditions under which the insurance company itself will define that care must be covered. For example, care that is incurred on a weekend, because they could say, well, maybe your doctor's office isn't open, so that justifies ER care. So there are several cases of these 12 included in this House report that do meet that standard for insurance coverage and meets the prudent layperson standard that are still denied subsequent to care because of the ultimate diagnosis. So this just seeks to close that one loophole.
Yes. Yes, ma'am. Mr. Chairman, if you don't mind, real quick, you gave some extreme examples. Are there some examples that are not so extreme to where that I mean, and you don't have to list them, but I'm saying those do exist where they're not to the extreme. And are we seeing the same thing in the urgent care venues where a lot of citizens tend to go to because they don't want to overload an emergency room when they realize that maybe it's not so bad, and they go to these urgent care centers and it's determined that it is impactful? Are those urgent care centers, are they impacted by denials the same way the emergency rooms are, or is that something that we've not looked into yet?
What I will say is that in terms of relative costs of care, is that care incurred in an emergency room setting is more expensive.
Right.
So obviously that's the objection of the insurance companies. There are less severe cases, in fact, that are detailed in this House report. I can think of one that was like a man with an intractable nosebleed who was taken on blood thinners. But they couldn't get the nosebleed to stop, and he went into the emergency room for that, which is actually a reasonable, cause to go in, intractable nosebleed. What I would say in terms of urgent care is that patients can certainly make their own assessment, and that's part of that prudent layperson assessment is like, do I need to go to the emergency room or not? And if they choose to go into urgent care, then that's part of their
Okay.
reasoning, and that's fair enough. And sometimes patients in urgent care, someone who works in urgent care, will get referred from urgent care to the emergency room and be like, this is more urgent.
Exactly.
And there are patients in this report that were told to go to emergency rooms and still had their claims back.
Thank you. Thank you, Mr. Chair.
And for the committee's benefit, we don't have anybody signed up to testify, so I'm going to ask the chairman to normally, when a subcommittee moves a bill out favorably, then that chairman is actually making a motion of do pass, but I want to make sure that that is true for the record.
Yes.
All right.
It is true. I could make a couple comments.
Absolutely, and you have the floor.
Thank you, Mr. Chairman. I will tell you, I was on call this weekend, and it's not uncommon to have to make a decision, over the phone, for us in primary care. The example I have is a caregiver calling who was weak after a vaccine. It certainly didn't sound like a complication for the vaccine. We were 5 days out from that. EMS had been called twice. The patient was stable, but he was very fragile. Now, Medicare would have never denied something like that, but if that patient had been a really Alzheimer's patient, as in like a 55-year-old with dementia, then that would have the potential. Obviously, from my perspective, I made the choice of whether they should go to urgent care or whether they should go to the emergency room. And in this situation, the caregiver was very hesitant about going to the emergency room. The patient could still ambulate, so I said, put them in the car and let's go. And they get admitted. So that's the kind of thing that we're trying to prevent people from, when they really do need care, when they have that question mark in the back of their mind about, well, is this going to be covered kind of thing. So they do look for that reassurance, and, good news is you can, many times this never comes up, but this is one of those loopholes that I think needs to be addressed, and I applaud you for bringing that. Thank you very much. This will be her first bill if we do reach that, and with having said that, I'd like to make a motion for do pass.
Those in favor of do pass, please raise your hand for me. And keep them up just a minute so we can get a good count. All right. All opposed? All right. Let the record show that bill's passed. Thank you, Senator. Congratulations.
Please feel free to keep those packets to look over at your leisure. If anyone doesn't want to keep it, we'll happily take it back to save paper for next time.
Senator Harbin, do you want to stay where you are to present the next bill? I'm fine with that if you are. So you're number 8 and you are recognized. Let's do 112 first.
112, okay, sir, thank you. If I could, I want to get one of them to pass this, just pass a copy of this for 113. I'll go ahead and do that now, so you'll do that for me if you will. Thank you, appreciate that. Thank you, Mr. Chairman. Senate SB 112 came out of a situation that I've had happen in multiple cases. And this usually occurs with small life insurance policies that are paid up. This has to do, and I'll give you the scenario. I had one of the account manager's mother found a policy that her dad had bought on her when she was 13 years old. It was a 20-pay life policy, and he had been dead for 14 years. She did not know the policy even existed. And under the current statute, there's not a requirement to mail an annual statement to the client. So she's 65 years old, finds the policy cleaning out some of his old stuff, and came to me with the policy and said, is this policy any good? We made phone calls and inquiries, and sure enough, the policy had $8,700 in value, even though her dad had paid 20 years of $10 a month for her. And looking through the policy, it actually had his old rural route address on it and some other things. And what this does simply is this: it requires the insurer that if there's a policy to just send an annual statement to let the person know that it exists. I know that there's some resistance in that respect sometimes because it's going to cost money, but here's a case where if she had not found the policy, it would have just sat there. Now when and many of these are smaller policies. I don't know if any of you know what debit policies are or debit routes. It's where the agent goes to the house and picks up the premium usually. But these are smaller policies on people who I believe are economically sometimes challenged and legally sometimes challenged. And I just think that to be able to have an annual statement be mailed out, at least there's an opportunity to identify the policy by the annual statement. And had she not come to me, and I know how to change to work through. We got on the phone, and in this case, the company had been sold once. It had a different name. We tracked it down, but it was able for her to cash it in for $8,000. But she didn't even know it existed, with her dad did for 14 years. Understanding this technically, I just kind of explained this. You have an owner of a policy, you have the insured, and you have the beneficiary. And those 3 people can be 3 separate people from that standpoint, but the beneficiary is the one who has the power to collect on the life insurance policy, and then the owner would be able to cash it in. But that's the issue. But that's what this is about. It's an annual notification, just being able to go to the insured of a contract of insurance that they have.
All right, thank you, Senator. Now, this subject matter is very familiar to me.
Yes, sir.
Don't we have a history about this bill?
Yes, sir. It has been passed through the Senate before, and we've learned this. Sometimes you have to just try, and try again.
All right. Okay. Does anybody have any questions for the bill's author? And I don't see anybody raising their hand. Was there somebody wanting to testify on this bill? You do? Okay. You can step to the microphone there and tell us who you are and let us know.
Thank you, Mr. Chairman. Bobby Potter on behalf of the American Council of Life Insurers. So virtually all life insurers are members of ACLI. There are 436 licensed to do business in Georgia. That'd be all the big names that you'd all be familiar with: the Travelers, the Prudential, New York Life, State Farm, Northwestern. There are 12 that are domiciled here: Atlanta Life, Bankers Fidelity, State Mutual, Life of the South, names you might be less familiar with, but are domiciled here. Over these past several years, and y'all referenced a memory of this, I've had many conversations with Senator Harbin on this issue and these concerns. I appreciate his passion, but this covers large face amount policies. It covers the small debit policies that he's referenced. And I would say in some of those conversations I related to him my dad was a debit route salesman for Metropolitan Life at the time I was born. He shifted occupations thereafter, but I was familiar with that from that perspective. And they literally would go and collect $1 or $2 for a policy at that time from the policy holder. On behalf of ACLI, I would say, again, we are opposed to this bill for just a couple of reasons I would outline. And this was Senate Bill 432, Senator Harbin, I believe, last year. I would say this, from the standpoint of ACLI and all of those companies, policy servicing is a matter of competitive advantage or disadvantage. Some do things one way, some do another. Some companies routinely provide annual statements, including for paid-up policies, and others do not. I'm told that some charge for them, others do not. From a big picture standpoint, I would say this is likely a matter of personal responsibility. If the owner purchases that policy and keeps up with it, then he or she would likely have that in the set of those documents that one would have that would be important, and when one passes away would be in those set of documents, maybe along with a will, maybe not, that would be important from a personal responsibility standpoint. This, however, is government mandate, which is a bit different. It does add an unnecessary expense from our perspective, and that would be particularly harmful, really, to the small face amount debit policies that Senator Harbin is trying to target in the first place, because that profit margin is considerably smaller. If this bill had been in place 20 years ago, in the circumstance that he has referenced, and this person has passed away 14 years before that, I'm not sure this would cure that in any way. If there's an annual policy statement, more than likely that, as many of us do, just like with privacy notices, it would come in the mail, you'd look at it, and you'd put it in the trash can. I'm not sure it would have the same efficacy and importance of the policy itself. There's a second part of this besides the annual disclosure. On the second page of this, in line 21, I think it is, subsection C, it requires the notification to others besides the policyholder. It could be the beneficiary, it might not be, but beneficiaries can change over time, and certainly addresses can change over time. So that would be particularly problematic for a number of insurers, and an added expense that I don't think is contemplated. There's another item in this bill that is part of it that Senator Harbin didn't address, but it's the policy locator service. And I would just say on behalf of that, it requires some things on the second page for insurers to check that and to respond. And our understanding is that is in fact working well. The policy locator service was created by the National Association of Insurance Commissioners. It went into effect about 2.5, 3 years ago, and has been quite successful. In Georgia, there were matches made that covered in the first 20 months about $22 million was recovered from that perspective. In the last fiscal year, I understand about $16 million. So there's a procedure in place to do that. And I would just say right now, that's established by the NAIC. All commissioners would comply with that, and it works. So I'm not sure there's a reason for legislation to touch that, to mandate insurers to do that. And the second piece of that is it mandates them to keep a report that they've checked this quarterly, and then it mandates them to send a report to the Department of Insurance. And in this day and age, I'm not sure the Department of Insurance wants a quarterly report from 436 licensed insurers, so 1,600 reports to keep up with. It just seems an excess and not necessary. So an additional expense that's not necessary. And the last item I would mention relative to this bill is insurers already, besides the NAIC product that's available, are required by Georgia law and by this legislature to check what's called the death master file. Sounds like something from Darth Vader, but it is the Social Security death master file that keeps up with all deaths in the United States. All insurers are obligated by your law to check that twice a year and then follow up with that in a variety of steps to match with the beneficiary. If they can't do that, have good faith effort to follow up with the beneficiaries. So that's our concern from the standpoint of ACLI. We believe this is a redundant layer, and we express those concerns and would ask that this not pass out. Thank you, sir.
All right, thank you. I think there may be a couple of questions. Senator Chairman Harbison? No,
I'm curious.
Harbison,
I'm sorry.
Age before you.
Yeah, nobody's ever confused.
Thank you, Mr. Chairman. It really seems to me that minimally, whether it's 5 years, a decade or something, minimally you should notify the beneficiary. What if the beneficiary does not know that the item is there, the policy is there? It's just, and I'm struggling with that, and without trying to put a layer of bureaucratic red tape on the insurance company. I'm not looking to do that, but it really has got to be some kind of meeting in my idea that if the dad has been dead for 14 years and the policy just laying there, and the person that's due the money is not benefiting from it, so we're just saying, well, laissez-faire, hands off. We'll just let money just lay there. And I thought I heard you say, though, that the death benefit is something that the insurance companies have to check out yearly, annually.
The Social Security death master file, they have to check twice per year.
Okay,
Yes, sir.
so what
And
happened in the case that he described?
And then pursue the match. So with this particular, and honestly, that was in Georgia law. Central Harbin, we dealt with that several years ago, but I don't think it was as much as 14 years ago. So I don't know that existed at that time. It may have. Anecdotally, relative to this circumstance, I don't know the answer to that. But I would say this, based on the information I was given, every day, it may seem surprising, but every day in Georgia, these life insurers pay out $39 million to beneficiaries and/or annuity holders, and that struck me as a large number in one sense. But they're covering lives of all Georgians. Obviously, in the United States, it's a ginormous number. But, so most are covered somewhere between the household that has affairs in order and has those documents, so that whoever's responsible for the estate can check that and pursue that, and that's done routinely. Then if it falls through that crack, there's the death master file, and insurers on that end are obligated to check for a death and pursue it from their perspective and see if there's a match with their policy count, and then pursue that with the information that they have about a beneficiary. As to this one item, I can't tell you exactly
Falling
what
into
did
the
happen.
cracks. I just really think that there's something we can do in the quarterly thing. I don't think I go along with that. I think that's a little burdensome, but at least there ought to be some kind of consideration about some certainty of, look, every 2 years, every 5 years, every year, or something like that. Perhaps it can follow a procedure to check that kind of thing. And you already mentioned that the death file that you mentioned, Social Security, and how that missed it. I can't figure that. Then if they missed it, how did they miss it if it's there already? It's a struggle for me to say just leave the money there,
Right.
and let the insurer the beneficiary just sort of miss out on what they're to do,
Right.
properly do.
Senator Harbison, obviously I don't know what happened in that circumstance. Senator Harbin did mention a 14-year gap, and that the insurer changed names, or the insurer was acquired by another insurer. So there may have been complication from that perspective.
Thank you.
But
Okay.
Thank you.
if we had had this conversation 10 years ago and said, gosh, something ought to be done, then that something was that insurers were required to check the Social Security death master file. And then if we had that 5 years ago, they'd say, well, what else ought to be done? Well, the NAIC put together this policy locator service. So those are two significant items that kind of cover the waterfront. Apparently, it's not 100%, but it's much, much better than it was.
Okay, we've got a lot of questions here, and we don't have a lot of time, so I'm going to go ahead and recognize those that have made their wishes known, but I'd ask the members to be as brief as possible because we've got another bill to do. So Senator Sims, you're next, and then Senator Robertson.
Thank you so much, Mr. Chairman. These are clients that have selected these insurance companies to do diligence for their financial obligations, either to themselves or to a beneficiary. So the expectation is that you would honor their wishes by making sure that those beneficiaries receive their monies, whether it's burdensome, bothersome, and with technology, it's very simple these days. And then, like a lot of brokerage houses, there are fees management fees, some of them have. So maybe we need to think about that. But I don't want to put a management fee on a $10,000 policy. I think that would be ludicrous. But as much as these folks have selected, whether it's Prudential, Liberty, or whatever, to handle their fiduciary responsibilities towards their beneficiaries, those insurance companies should feel obligated to make sure that these beneficiaries receive their due just. So I just wanted to say that, Mr. Chairman. Or else we don't need them. Can I say that too? Absolutely. Yes, sir. Thank you. No, sir. Statement.
Just really quick, you talked about several things that y'all have set up through the National Association of Insurance Commissioners and through the Death Master File and other things that y'all have done. Do you happen to have a number approximately of how many life insurance policies in the United States go unclaimed every year?
I don't. Senator Harbin and I've had that conversation over the last several years when there was discussion about that, but I don't have that here today.
Yeah, and I appreciate the organization, but a lot of the people I represent in the rural parts, very elderly people, old people. When my dad passed away, if it wasn't for me and my sisters digging through his files and all this stuff, we would not have known of 3 of these policies that he had.
Yes, sir.
And so I understand Senator Harbin's concern, and while I appreciate the efforts y'all have put out, I find it odd that other number wouldn't be as important too. But thank you, I appreciate that.
So I might just mention one thing. I mentioned my dad. He bought a policy on me when I was born it was a $1,000 policy. I've still got it because I know about it, and I get a statement annually, and I pay them $13. I don't really need a $1,000 policy, but it's sort of an emotional thing. But I get that. But that's 72 years ago. If they were obligated to notify me for 72 years through all those address changes, I'm just not sure how it can work. And if they were just obligated to notify him, it wouldn't have helped anyway. Fundamentally, that's a couple of the concerns.
Thank you, Mr. Chairman. Senator Robinson already answered the question. I wanted to know the data on how many occurrences have happened to where people were not notified and the money was sitting there. And my only other comment is the fact that it does happen where people are not getting notified kind of facilitates the need for this legislation. I don't think, going so long, 14 years, and no one knows about a policy, the insurance companies should have some responsibility. And the fact that this has been happening just shows that maybe legislation like this is needed.
Yes, sir. Thank you. I appreciate y'all.
Thank you, Mr. Chairman, and I certainly support the intent of this legislation. In fact, I am a signer onto it, and I've had a kind of similar story as to what Senator Hart. I'm in the insurance business myself, insurance agent, and a friend of mine came to me, and his wife had died a few years prior, and he was on up in age himself, and he was starting to kind of have some dementia, signs of dementia. Anyway, he had found a policy that her father bought on her when she was a child, and he asked me to run it down, help him run it down, and sure enough, the company had changed hands two or three times. It wasn't the original company, and it took some effort, but sure enough, it was still in force. It wasn't a large death benefit amount, but it was enforced, and we were able to file the death claim. That once we connected with the company, they were very eager and willing to pay the death claim, and they actually paid interest on the death benefit from the date of death to the time they issued the check. So I wanted to point that out to the other members that maybe aren't in the insurance business. There is a requirement that they pay interest on the death benefit. But I wonder if we couldn't. I don't think any of us here. We want to be friendly, business friendly, and we want to have a thriving insurance business here, especially for the carriers that are domiciled here in Georgia. I wonder if this reporting to the commissioner's office is not something we could, Mr. Chairman, would you be amenable to maybe looking at that? I mean, I sort of agree with the testimony that quarterly reporting, sending these reports quarterly to the Georgia Department of Insurance seems like a lot to me that probably wouldn't really get looked at, and I wonder if we couldn't just require the carriers to retain the reports and make them available to the Georgia Department of Insurance upon request. And if the commissioner's office is doing like an annual exam of the carrier, they could include that in part of their exam to review these reports. I don't think it weakens the bill, the intent of the bill, and it might satisfy some of the concerns of the industry, and I'll just throw that out there.
Thank you. I think Chairman Harbison had the same concern, sounded like when he had his question, that quarterly might be.
Yeah, I was going to say, we're going to address this probably in the next bill, because the next bill has to do with the issue of the NAIC reporting issue. We're going to address that issue. I don't know whether you would want to table this as a hearing only, and then bring it back up, because I'm going to answer some of your questions, I think, in the next bill specifically. This one was dealing with an annual notification as much as anything, and the second part would address that in the second bill.
All right. I think that would be appropriate. The chair will entertain a motion to table this temporarily, and we'll decide whether we want to move it out today. We got plenty of time before crossover. We'll try to get this right.
Okay.
So I'll entertain a motion from
Yeah, I'll make that
Chairman
motion.
Walker to table it. To hear a second. Got a second from Chairman Kirkpatrick. All right. We'll consider this bill tabled then, Mr. Chairman, and if you want to move forward with
Yes, sir.
Senate Bill 113, and let me make sure it's LC 460383.
Correct. This has to do specifically with the reporting, and let me kind of give you a little history. I've got 42 years of experience in the insurance business, life insurance. I'm registered rep, which means I deal in securities issues as well. I'm certified also as a life settlement specialist in settling, even in the sale of contracts. This comes back to an issue that occurred about 5 years ago. If you go out on the internet, you'll find that 60 Minutes ran a segment on the issue of finding policies. And Florida ultimately settled for a $7.5 billion settlement with the life insurance companies in Florida. You also find some other things, and I handed out a piece to you, and I'm going to talk a little bit about what happens. Each state is regulated by the state it operates in. Even though that state may operate in multiple states, the regulatory side is with the state that it's domiciled, that it's operating in. So Georgia is over Georgia, Texas is over Texas, et cetera. The NAIC, the National Association of Insurance Commissioners, does not have authority over the insurance companies that operate in Georgia. They are over the big part of the national commissioners work together. They came out with the policy Locator, and if you go to the Georgia Insurance Department right now, you can get a link and it will take you there. I just finished a meeting with the Commissioner's office about an hour ago and talking about this, and this is a voluntary thing currently. Now many companies are participating, but not every company is participating in the process. And here's what happens. If you have a loved one who passes away and you want to find a policy, you log on to that website and put the information into that. They are then not required currently, they are voluntarily searching that and come back to the person and say, I found a policy or did not find a policy. But it is a totally voluntary issue right now. It is not mandated by anyone. If you read the piece that I put on your desk, or it was handed out, it's from the CPA Journal, and it's titled Lost Life Insurance and Annuities, Accounting for Missing Assets for Probate Estates. And I'll just read you one part that came out of that. And it names a company here, and I'm going to read it because it's public information. It says, Metropolitan, one of the largest providers of life insurance and annuities, recently acknowledged that in the past 2 decades, it had failed to take reasonable efforts to confirm the death of insured parties and notify policy beneficiaries. The insurer entered into a consent order with the New York State Department of Finance Services in January of 2019, wherein it agreed to pay restitution of more than $189 million in retroactive benefits, plus a fine of nearly $20 million. You go on, the Metropolitan will pay those fines. So here's what I'll tell you. This happened in the state of New York. I will tell you it's happened in Michigan. There are other places that this is going on. The way the bill is it would be mandated and be reported. Now, the quarterly report, annual report's fine with me either way. But here's what you need to understand. Now, the industry has taken a stance that they get the owner of the policy, and they get his name and address and information. They get the beneficiaries now name and address and beneficiary. They used to not do that, and the insureds as well. There is also now a provision in new policies for a third party, so that if someone is not able to function, if you will, there's a third-party notification that goes out. So the industry has recognized the problems that they have. What this is looking back for those people who have already bought policies and cannot find the policies. And I ask the members even here or anybody listening to us, do you know what your parents have in insurance? I will tell you that many times it's just very hard to find, especially as people live longer, it's harder to find those documents and information. And this bill really is to mandate it for a period of time, because right now it is voluntary. The insurance department, I was with them just a minute, and the commissioner, and I think last year Mr. Potter was right, about $16 million was found. These are people who didn't know that those policies were out there. And I just think this is a part. We've got an information age that makes it far easier as we move forward, but there's a lot of stuff backwards that you don't know about. And I will tell you that in my career, I have found policies that no one knew about. We had to go through the banking, we had to go through the checking accounts to find those. And I just think this is that the National Association has recognized the need for the search engine, because what they do is they match up the Social Security death list, and they know when these people have died. Now, if they have an annuity on them that is paying them, they will turn that off. But if you look at an insurance contract, the insurance contract, since the insured is dead, the beneficiary is required to file the claim. And so if that beneficiary does not know, he does not have the ability to do that. So this is really something to, I believe, kind of look backwards to protect those in the back. And then coming forward, the industry is doing a much better job than it has. But if you look at this article and if you look at the 60-minute special that was done, and it's on TV, I just think it's something that needs to be done at least for a period of time. This does have a sunset provision in it. We went out to 2025, I believe. But it's a consumer bill is what it is. And I work with all major companies and understand it. But also, here's the biggest insurance company right here that it was admitting that they had some issues that they've not done well. And I will tell you that the insurance industry has taken on a lot more of that. They've taken on responsibility, which is good from that standpoint. But as our good friend Ronald Reagan said, when they feel the heat, they see the light. And I think that's a part of what we're seeing here.
All right. Chairman Kirkpatrick.
Yeah, I just had a question, Senator
ma'am.
Harbin. Having recently lost my dad at 101
Wow.
with dementia for many years and trying to piece together all of the things you're talking about, I'm trying to understand how, I mean, I am not in the insurance business, but I have dealt with the law for a few years now, and I don't know how a consumer or beneficiary or someone who's trying to track down insurance policies or whatever would even know that there's a policy locator that exists. I mean, I wouldn't have even known about that had you not brought this forward last year. So there seems to be a gap between the requirement of what the insurance companies have to do and how the public would ever know that that's even out there.
I'm gonna make a statement. That's the importance of an agent that understands the process. And I believe that this is even more important going forward because many people are buying their coverages directly from the agent, or excuse me, from the company. And so there's nobody in between to really kind of help them. And so I think it, if you will, you're buying on the internet, you're buying things, and there's no agent in between. And that's what really I see myself and Senator Walker, when we serve our clients, we're kind of the intermediary between them. And we're seeing that especially as our parents get older, dementia lies in, very much an issue. And this is fairly new. When I say this, the Locator is about 3 years old and came out of the National Association from that standpoint. I don't believe, and I may be wrong, I don't believe that it's statutorily required right now in the state of Georgia to check that and give the report. We had used a quarterly, you know, I'm like this, I'm open to annual. I just think some degree of regulatory authority needs to be there to get them started, if you will. And that's why I said a sunset provision was in the bill as well. Get them started with good habits and maybe they'll keep them as they go.
Anybody else have any questions for the bill's author? Public testimony? Nobody?
Mr. Chairman, my comments on the previous bill covered some of this because I think it's the exact language that's included in that. So
Okay.
that's the concern, particularly in the paper reports.
Okay. Senator Harbin, what I think I would like for us to do is for you to get with Chairman Walker and come up with committee subs with maybe the reporting language to be adjusted somewhat and bring it back to our meeting next time, and let's plan on seeing what the committee's will is at that time, which I think is pretty favorable. But you okay with that?
Thank you, Mr. Chairman. Appreciate that.
Chairman Walker, were you amenable?
Yes, sir.
Okay. All right. Any other business before the committee? If not, we are adjourned. Thank y'all.